So the patient ape gets the banana. Well, what does that mean? Well, it means AMC is literally the mother of all shorts. And if you're holding shares, patiently waiting, you might be on the right side of history here. So that's a pretty bold claim. What do I mean by all that? Well, we're going to get into the SEC filings of fails to deliver over the past few months for AMC, and then we're going to compare that to GameStop and compare the two charts and price actions to see maybe a glimpse into the future and get a little glimpse at what our good friends over on Wall Street in the hedge funds have been up to. So we're going to get into some numbers. This is the AMC failure to deliver chart right here. This is tens of millions of shares, by the way, guys, but we're going to go over to GameStop first because GameStop has already had a little bit of a squeeze. So we're going to get into some numbers. Now, we're going to see here on the GameStop chart, these data points here are the failure to delivers. And in these failure to delivers, you'll see that there's a lot more consistent ones on this chart over here. But when we get into the numbers, okay, so here we have 2 million, 2.6 million, 3.2 million. Now those are 3.2 million shares that were failed to deliver. Now failed to deliver pretty much means that the shares were fraudulent, synthetic, whatever you want to call it. The shares weren't there. They couldn't be given back when the short positions were covered. So they had to be buyed back on market. And that's what causes these crazy price surges, is when these short positions pretty much get caught doing illegal price manipulations. Now the SEC is doing their best to track all this, and with the new legislation coming out, it gives the SEC a lot more power to check and monitor very large high-risk positions. If you guys haven't checked out Trey Trades and Matt Kohrs, they do really great video analysis of these new SEC reports as well. Go check them out, guys. What do you do on the weekend as an ape? You build conviction. So go build your conviction. Check out their channels as well if you haven't already. But yeah, so with GME, we kind of see all these failure to delivers. Now you're thinking, wow, 3 million shares. That's a lot. And look how high the price went. Pardon me. Let's go over to AMC's chart. So that number there, guys, is 27,693,649 failure to delivers. Now, admittedly, the price is lower on AMC in this range than it was comparatively to GameStop, GME. However, that is significantly larger. Let's go to one of these smaller data points. That is 13 million, 13 point nearly 4 million failure to deliver shares, synthetic shares. 8.8 million. 11.5 million. Let's go down to one of these measly data points down here. 5.4 million failures to deliver. Guys, there have been more failures to deliver in the month of June on AMC than there was in the largest spike of failure to delivers in GameStop. Guys, this is the mother of all shorts here. The amount of fraudulent, outstanding shares that have been used to suppress the price action of this stock is mind-boggling. So let's find the price action point right here. So when the price reached $20 on January 27th, there was 27.6 million failures to deliver correlating with the price suppression. We go down to these other data points. January 31st, we go down to $13. It still has 1.9 failures to deliver. 2.8 failures to deliver. That's million shares. 2.8 million shares just in thin air. Price hits 14, 13. Look at all these failure to delivers, guys. This is insane. And the fact that this is the data points from the SEC website really makes me think that there's going to be some action taken soon when it comes to forcing the hedge funds to close these incredibly over-leveraged, they're so over-leveraged to the point where they're illegal positions. Now, why do I think these positions are going to be forcefully closed out by the SEC? Well, the SEC has actually released new rules and regulations about heavily shorted companies. I do believe the form is the SEC 203 form. And this actually means that if there's 5 days of consistently large failure to delivers, that the companies that are being shorted are going to be checked on by the SEC, and then the hedge funds will be forced to either close out their positions or get margin called to keep the capital requirements required for such a lofty, risky trade. So that means with that threshold being triggered at the end of last week, this week for GameStop and AMC and all those other highly shorted companies could be incredibly volatile. Now, especially I'm going to be watching AMC because with all of these crazy failure to delivers, like guys, in this one data point right here, there's more failure to delivers than in this whole range. In this whole range on GameStop, January 2nd to October, there's less failure to delivers than just on January 26th for AMC. This is crazy, guys. And with the SEC checking on AMC, checking on the hedge funds, we're going to see a very, very volatile week for these meme stocks, like I said, guys. So during the weekend, it's the apes' job to get rest, set up their technical analysis, and build their conviction for the following week, guys. These short positions aren't going anywhere. The hedge funds aren't going anywhere. So retail has to stick it out too. We can't go anywhere, guys. We have to ape this out. This is literally a battle of extreme proportions. The market has not seen this level of intense market fluctuation, and some might even say manipulation, since the 80s with the Volkswagen and Porsche short squeeze, guys. And back then the share price went to 1,200 a share, just saying. So maybe keep that in mind, that when big money and the SEC and all these things get involved in crazy short positions and highly leveraged products, you can see some crazy thing happen, guys. So definitely keep your eyes out. Keep watching videos about AMC. Do your research. Do your due diligence. This is not financial advice. This is strictly entertainment purposes for the Ape Movement. But guys, for real, watch videos, do research, build your conviction, and watch AMC this following week. I will see you guys in the next update video. It'll be an AMC video. We're going to be cranking them out for you guys. This stuff is crazy. These numbers are insane. These numbers do not lie. This is the SEC's website reporting 27.69 million failures to deliver. Over here in another data point, 5.4 million failures to deliver. Guys, this is crazy. Go check it out for yourself. I'll leave the link down in the description below. Leave a comment what you think about this. Let me know. Is this crazy? Is this even real at this point? I'll see you guys in the next one.